What's up, guys? Welcome to another episode of the DJ Radio Podcast. I'm your host, Thiago Vilela, and today I had a great conversation with Yiying, co founder at Jarsy. Jarsy is a pioneer in pre IPO stocks trading, a topic that has gotten pretty hot lately. And it was a great conversation. I really like the idea. So come check the episode. Hey, Ying, welcome to the show. Thanks for coming. And before we start, can you introduce yourself and talk a little bit? How did you get into crypto and why did you start Jarsy?
Yeah, sure. I got into crypto in 2017, the first ICO wave. Because I work in Wall Street in the insurance industry, and I found it's a super boring industry. But I heard that at that time, blockchain will be the a consulting person told me that blockchain will renovate and disrupt the industry. So I started to learn blockchain in order to change my career. But I accidentally got into a because I studied at MIT, and my alumni just pulled me into their Ethereum based P2P lending protocol.
Oh,
And
cool.
that's the first time I saw the beauty of blockchain, where there are like, kind of decentralized and governance and audit people and the incentive to reward people for lending the money, etc., etc. I just found that blockchain is gonna become a very useful, or how to say it, a medium to make the
Mhm.
financial infrastructure more effective. But unfortunately, it didn't happen for many years until the DeFi summer. But I was so excited that the crypto thing is booming again. The Bitcoin go all the way to 100K before, and
Yeah.
I joined the crypto world again. But then I was doing NFT project, so I started my
Oh,
NFT company called Sitter. It's a buy NFT pay later. I call it BNPL company, and it was
mhm.
backed by Circle Leadership, OpenSea Venture, and a lot of great people in the industry, in the Web3 industry. That's
Oh,
how
cool.
I second time joined the crypto world. And then the NFT market plummet, and I need to find the next thing to do. And that's how I, just thinking a lot. And then my current co-founder and CEO Han, he is already exited from Afterpay at that time, because Afterpay was sold to Square for $30 billion, and I think
Oh,
he's pretty
damn.
well off at that moment. And he's like, Ying, let's find the real use case of blockchain. And I was like, man, this idea is aligned with my vision, because I need a like I've been in crypto in so long, but either the timing was not right, or I choose a vertical where I didn't see the real value. So I desperately need to find the crypto in the real value use cases. That's how we brainstorm and bootstrap and started Jarsy. Yeah.
Oh, cool. And one interesting thing is about DeFi that you said. I think all of us that joined the space like back in 2020 and before, the first time we interacted with DeFi was like the head was exploding. Boom, what this is just better. It's just better.
Yeah.
And yeah, it's a magical feeling. And you guys started brainstorming this in 2022 or 2023 when you started
End of
brainstorming.
the Jarsy is the end of 2023. We okay, so I was talking to Han, and he's like, we should provide something that's useful to the younger generation. And I said, what is useful to the younger generation? He said, real estate, because real estate is expensive. Young people cannot
Yeah.
afford a penthouse in Manhattan. Let's tokenize that. But I did so much research into. I researched a lot of students from college, and they don't care about real estate. This is uncool. They can just rent, and they don't have a specific interest in a specific property. Everyone has different taste and appetite. So yeah, then I realized that we should find something more unified and standardized. And we brainstorm, and we found that everyone wants SpaceX. So that's why we just
Oh.
brainstorm and figure out that SpaceX is what everyone can want in the US. That's why our first product is the tokenized SpaceX. Yeah.
Oh, cool. Yeah, I was going to ask that. Like, how did you come to the pre-IPO stuff? Because back then, the IPO market wasn't hot. Like, the stocks were like coming back, but still weren't at the highs. Bitcoin just had the ETFs approved, it was about to be approved actually, and we didn't have like a this AI boom that we're seeing now. We had OpenAI, we had SpaceX, but we didn't have like Anthropic like making noise. We didn't have Perplexity making noise, and all these like robotics companies that we see now, and all these things that started like kind of last year. So you kind of like just fast forward a little bit some of the demands, and now how does like Jarsy works right now? Can you give like an overview on like how the architecture behind the project?
Yeah, sure. I'm glad you asked that because when I first started, I did realize people don't care about Anthropic as much as now because currently it's raised for 170B. I know a lot of friends around me are asking about that. But at that time, it's more like, do you want Anthropic? It's the competitor to OpenAI. Have you heard of it? So yeah,
Yeah.
when we first started this, SpaceX is still very strong, demand. So it's no doubt that if we can get SpaceX, our friends in Silicon Valley, our coworkers and the friends from tech companies, they all love that. Although they are kind of they're mostly millionaires because tech paid really well, but they still cannot access that. So we are pretty sure that if we tokenize SpaceX, people want it. But for other companies, we were debating at that time because it feels like our platform becomes one product is the only gateway product and the only popular thing. So, but at that time, we are pretty, we see the trend already because we see that the AI company can raise a lot of money. Because at that time, when Jarsy go out to raise, people will say, "You are not AI company. Like there's a Han, you are a veteran in like Facebook. You're large, your leadership in Uber. You should do an AI company, and we will give you a lot of capital if you raise." So at that time, Han was pretty sure that AI has no problem to raise and stay private for a decent amount of time.
Yeah.
So that proves that's when we generate this thesis that you know the AI and the frontier technology company will stay longer and longer in the private
Yeah.
market. That's why we feel like we're gonna have a business to live. Yeah.
You nailed it because we're seeing like OpenAI's private for ages, Entropic too, and like they're not showing signs of like wanna do an IPO. So you nailed this.
Yeah, exactly. Because
But
the capital is so easy to raise and you don't need to disclose so much of your balance sheet information. And you can quite relatively well control your price. Don't like the founders can have more power to do some research and long-term vision thing. Because if you're a public company and you spend a lot of money on R&D for a specific special project and doesn't work out, then your price will will reflect that.
yeah,
But if you stay private, you have more flexibility to do cool things the founder wants to do.
yeah, it's true. We see this in crypto. Crypto like super speed is in like to like a whole different level. And when the project's like the tokens plummeting, everybody comes out with the pitchforks to the founders, and
Yeah,
yeah,
exactly. Yeah.
it's less noisy. But
Yeah.
so in Jarsy right now, you guys have like the tokenized stocks and the pre-IPO, sorry, and you also have tokenized stocks, right?
Yeah.
So how does it work? How many companies do you have listed right now in the pre-IPO and in the already public? And how many did you have like the deals that already went public?
Yeah, sure. So we have 20 to 30 companies listed for pre-IPOs, I guess. And for the public, we have mostly the most popular ones like Tesla, QQQ, those, or
Yeah.
the government bond exposure like that. And so basically, the reason why we have the public sector is not that we're trying to compete with Kraken's X stocks or Gemini Denari, those specializing public equity tokenization. We have that section. It's like you said, because once our pre-IPO company goes public, right, user need to exit. So we will for example, Circle is the only company that has IPO'd in our private company list. So
Mm,
it will there's a 6 month lock period since the IPO, ring the bell. And
mm,
so in December this year, the circle will be moved to the public equity sector, and the people can trade it in our platform as if they are trading a public equity. But they bought it
right.
in the private market price, which is $25 per share for circle, which
Oh,
is a huge,
nice,
yeah, 10x.
nice,
Yeah,
huge win.
yeah.
Nice, very very cool. So you don't want like expand like to have the public markets as something that like some of the main business, right? It's just like a complementary stuff.
Yeah, yeah,
That oh cool. And I didn't know Denari was from Gemini. I saw the platform already, but I didn't know it was from Gemini.
Oh, it's not
Yeah.
from the Gemini, but it's more like a partnership, I guess. So it's like X stock
Oh,
X stock
yeah,
is back finance, right? So back finance is working with Kraken on the
yeah,
X
yeah.
stock together, but it's not back finance belong to Kraken. Yeah.
Yeah, yeah, got it, got it. All right, so now let's get a step back and go into the pre-IPO markets. Like, what's the size right now? I when I was researching to for the podcast, I saw there's a few companies in the traditional side. Let me get it. It's Forge and Equities, and there's like pre-stocks in crypto too. There's some on the perp side. How like what's the size of this market, and like how was this market like when you started? How did it evolve? Can you like give like a small history lesson here on the pre-IPO markets?
Yeah, this is a really great question. I think that to understand Jarsy, you need to under our competitors in both. I wouldn't say competitor, but comparables in both Web two world
Mm.
and Web three world. I will start from the Web two world because that has exists for a very very long time. Like Forge has go public, right? And Equities is a
Oh,
very
didn't know
large
that.
platform. Yeah, it is. So when we first research into this industry landscape, we found that there is very formal and very established company like Forge. So the good thing about them is that they go through the SPV membership subscription. So you go through a lot of paperwork. They do qualified purchase, a lot of examination across your your profile,
Yeah,
and they get you the asset. But there's also a lot of problem with that doesn't fit into the modern investors. One is the threshold is pretty high. Undeniably, the private pre-IPO is not for everyone to invest. So usually
yeah.
start from 100K for one asset type. And the second
Oh,
problem is not transparent. Like, because the way they operate is you sign up for the interest. There's no modern tech like Robinhood type of execution flow like that. So you basically just sign up for your interest and you're on the watch list. So they will sometimes email you, call you, and say, hey, there's some allocation, are you interested in that? And even if you're committed, it's not guaranteeing that they will fulfill
oh,
that, just because the whole the whole process is kind of like broker calling you style. I would say old school, I would say. So
oh,
it doesn't feel very sleek to people who are used to Robinhood. You
got
just
it.
click, yeah, and the submit, and the order is success, guaranteed to be success.
Oh,
So yeah, it's a lot of issue on
so
that side. And
let me
on the
just
other, yeah,
sorry.
sorry.
Let
Yeah,
me just interrupt you and just
yeah.
to explain for the crypto native mind, because I'm pretty sure some people that listen here, they don't know like how the brokers and stuff works. So it is similar to if you have like an echo deal and it's like first come first service basis, and some allocation might like get refunded in this structure. Something like that, right? In a very rough manner, of course.
Yes,
It's like that, right?
exactly.
Uh,
Yeah, yeah, exactly. So yeah, that's why I feel like crypto people cannot understand, especially DeFi
yeah,
native, because when things are programmable, it's definitive, right?
yeah,
It's the program say yes, then you just accept. Maybe there's slippage, but it tells you. But in the traditional world, you really don't know what they do back behind their office. You just
yeah. It's a
failed,
black
or you just
box.
yeah.
Yeah.
So that's a problem with the traditional market. And also the price discovery is really, really bad because there's a minimum buy and sell orders. So you really don't know if you buy the perplexity what's the right price you should ask, ask for a bid for. And for when you sell stuff, you also could have 30%, error, in the
Mm,
actual settle price. So it's very illiquid. Basically, you'd better just wait
mm.
until IPO to sell your stuff as a public equity, but it's not going to happen very likely in the near future as
Yeah.
well. So that's a problem with traditional markets: super inefficient, super fractional, and super intransparent. And the second piece is about the pre-stock and the ventral. One is I think they're also doing the pre-IPO tokenization, and some
Mm.
are perps. So
Ventos is perps. Yeah.
perps, yeah, right.
Ve-
So
Ventos
yeah,
perps. Yeah.
yeah. So so the difference, I wouldn't say bad or good thing. I think we just different, right? So our mechanism is we have the real asset backed. So the reason why we can make the transaction sleek is because we already acquired some of the assets to our platform. So basically, Jarsy guarantee the deal is settled, and then when you trade like on Jarsy, you just trade against us, and we are a technology platform where everything is self-serve. You shouldn't involve talking with me or any customer support people.
Mm.
So that's how we make it sleek. And then since we have the backed asset, so our price won't be depegged from the
Yeah.
actual market in the outside. So it's mostly just waving around the latest valuation. For example, Anthropic last valuation was 640B, 664B, now is 170B. So we could have a price jump, but it won't go crazy like because of the funding rate or long and short
Yeah.
position, the price go crazy.
It's-
Yeah.
Yeah, you cannot manipulate that, right? Yeah, we saw what happened recently with the plasma pre-markets in the hyperliquid, and the guy just said like he fat fingered it and liquidated like $100 million. That was
Yeah,
insane.
yeah,
Mm.
exactly. Because at the end of the day, whoever get the Jarsy token gonna redeem the equity share worth of dollars when it goes
Yeah.
IPO. So people, when there's a spot, it's like a spot, right? At the end of
Yeah.
the contract, you got delivered with commodity. So why do you want to pay too much for
Yeah.
it, right? So
Yeah.
mm,
So all right, got it. I think I could understand everything.
mhm.
And when you said you already acquired like most of the assets or some of the assets, and is there a way that I can like try to purchase some allocation and you still didn't acquire that? And is there a chance for you guys to not acquire it and have like some trouble and refund me? Can this situation happen with Jarsy?
You mean the first of all, Jarsy have two sectors. One is the pre-sale, and that part we specify that Jarsy doesn't own this asset yet.
Oh,
Um,
yeah.
that part is perfect for people who want a large allocation, right? So because if you want to buy a million Anthropic, Jarsy won't, pay the a million using our corporate money upfront for you
Sure.
in order to acquire that. So we just say that you join the pre-sale and we lock your fund, and if it's ready, everyone's money
Mm,
put together, and we just settle mint
yeah.
token for you guys. But on the that part is not guaranteed. But for the asset backed token, where we already use our treasure, our own money
Yeah.
to purchase those equities across these 20 assets, you can place a small order, and we will make sure when it's settled, then it's settled. Yeah.
Oh, cool. And by small order, what size do you mean? Like between like 100 to like $10,000? What like is this
Yeah,
like small size?
that's small size. The bigger size is like 100K to million. Yeah.
The 100K to more. Yeah, all right. So if I want like to buy like to between like 10 even to 50K, I can't find some stuff in the website. But if I want like more than that, I'll probably need to buy, and you guys will try to get like more shares through the SPVs, and then I get it right.
Yeah, yeah,
And
exactly. Yeah.
all right, I just want to give like two step backs. The first one is like on the regulatory front. You started like the end of 2023, and for raising you guys raised a pre-seed, right? Right?
Yeah. Yeah.
And for two questions, like I want to know like how was like to create a business that you need to have like a lot of like regulatory burdens and a lot of stuff to solve during the Gensler era, and how did you guys think about that? and how hard was for you to raise money in that era of like uncertainty and like the SEC dropping like lawsuits against all crypto platforms, and you do something on the intersection between that. How was that?
Yes, that's a great question. We started at the hardest time of our life, like, when the pre-IPO was not on the spotlight and when the Gensler hasn't quit yet. We just stick to it for a year. And in that year, we try to raise, even though like our founders have a good connection to the Silicon Valley VCs because of their previous tracking record,
Yeah.
but we got rejected by everyone because they're like, you are not gonna, like, nobody will let you do it, like in SEC won't let you do it. But once after the President Trump win the
Mm.
the presidency election, things started to change. I only talked to one VC and Briar Capital. They are also the co-lead of Circle Series A round, and
Oh,
Jim Briar is also like the lead investor of Facebook Series A. So
oh, yeah.
we yeah and immediately after the election, I talked to the VC, and they just, I feel like they make it really fast to move all the way to closing the deal, and we just
Oh,
successfully raised. So I
oh,
feel like
cool.
it's basically TLDR is in the previous 11 months we just struggling, and once the market change, we suddenly get the tailwind.
Yeah, that's funny and like expected, because like nobody wants to like put money in something that they don't think like the government will allow you to do. So yeah. And
Yeah.
now on the regulatory side, how's the regulatory structure? It's like organize it, and you don't need to get to a lot of details. I'm not a lawyer, and yeah, I don't know a lot of the US laws.
Yeah.
So but can you just explain a little bit how this works, like what's an SPV, and like what's as the guarantees that buyers have, what's the obligations and all this stuff?
Yeah, sure. So first, Jarsy is a U.S. registered company, and both our C Corp and our SPVs are registered in the U.S. So we strictly follow the U.S. rule, which means first thing first, for investors in the U.S., because you invest in the pre-IPO exposure, so you have to be Reg D. So basically, you need to be accredited investor in the U.S. to use our product. But if you are outside of the U.S., we follow Reg S, which means anyone can. You don't need to be accredited in order to invest in Jarsy. That's from the qualification perspective. And as for the assets, just the trust of like, and the custody perspective on Jersey. So we have the C corp and have the SPV. That, so the C corp is R&D, which is us, the team, and SPV is where the assets are stored. So it's like Perplexity, Databreak,
Yeah.
etc. SpaceX, they're all in that thing. And when users buy our token, they basically is buying the economic rights token that is backed by the assets in the SPV. So it's very similar to Circle stable coin structure, where the
Mhm.
USDC, you cannot redeem the USDC for $1 as a regular person, but
Yeah, I know.
you, unless you're institution, right? But you can the guarantee that this USDC is backed by a reserve, like in their MM fund, money market fund. They do have this amount of USD that back your token. So yeah, that's how we structure, yeah, the legal. So
Oh,
it's we make it basically it's non-redeemable, but you own the economic right and you don't own the voting rights of the equity, the underlying equities. Yeah.
yeah, only after I redeem, right? Yeah, if I
Yeah.
redeem, yeah, got it. And
You only
how?
after what you redeem is also cash. You
Oh,
don't redeem equity.
oh, I don't redeem equity when it goes public.
Goes public, you can just trade it like public equity on our platform. For
Yeah,
example, you
no,
think
no,
today's circle is all time high, you just sell it the token and we give you the
oh,
cash. Yeah.
no, yeah, that's what I was asking. Like, I don't have
Okay.
like the right to get the stock. I get the money,
Never.
the cash equivalent, and then I can go to the broker and buy the stock, right?
Yeah, exactly. Yeah. You can do it that
Got it.
way. Yeah. Yeah.
Oh, got it. So we don't get the stock. That's yeah. That's what I wanted to
Oh,
clarify.
okay. Great
All
catch. Yeah.
right.
Mm.
And I in this kind of business, like there's a lot, like you said, like some companies they are staying private for longer. And when I invest something like let's say I bought like I don't know Entropic shares, and
Mhm,
now it's 2025, and it's passed by like it's 2028, and they didn't go public yet. And
mhm,
for some reason, like I want the money and need the money and whatever. And
mhm.
for me to sell this, like, is there like you said you kind of make markets for the smaller orders, so can I sell this direct to you, or do I need to like open like a P2P order? Can I do it in a discount if I want to sell it like faster? Is that a market maker? How does it work for the liquidity side?
Great question. So that's how we different from the traditional player like equities and Forge. Because for them, you literally just hold it until IPO because it's very hard to transfer, you know. But on our platform, since you what you got is token, right? So what you bought is similar to what we have is private tokens you can buy and sell on Jarsy. And you can also do fractional. For example, you bought 100 shares, you can just sell 0.0001 shares for your
Oh,
money
cool.
like lifetime use, right? And the transaction fee is very cheap. So the difference here is that we did something to the private equity market in our platform. So we create an AMM mechanism where users can buy and sell based on the market dynamic. So if you really need to use money, you can just look at the current market buy and sell price to evaluate if it's worth you to sell or buy. And the more you sell, the worse price will become, and the more you buy, the more expensive the price will become as well. So this is the innovation we did, like for the pre-IPO
It,
AMM. It's a single-sided, and it's also you need to consider a lot of
it,
factors, and this
it
is
works
our
like a
core.
bonding curve, right? It
Yeah, it's a
works like a
bonding curve.
bonding curve.
It's a bonding curve with a lot of factors. Yeah.
Oh, cool.
Mm.
Wow, that's that. Yeah, interesting. And do you plan to make like the tokenized stocks available for users to use in DeFi, like to use it in money markets, in AMMs? Do you have plans for that?
We do, but the current blocker is the compliance issue because
Mm.
if pre-IPO, like if the SEC or the US regulatory think the pre-IPO should be it's more similar to security where people need to be
Yeah.
KYC. That's the blocker stopping us from doing that. But from Jarvis's vision, we believe in blockchain, so that's why we make it ERC20 token, because we can be
Mm.
on the DeFi if this is allowed. But if it's not, we will just close this,
Yeah.
pass. Yeah.
Yeah. Makes sense. And you mentioned like the cheap fees, and like how is the fee structure works? And like, do you have like different fee tiers for those deals for the private equity? How does it work?
I love this question. So, phasing is a very controversial thing because I saw on Twitter some people complain that you charge 5%. You're crazy. Um. So firstly,
Five.
Jarsy is charging 5% for just buy. So when you sell it, there's
Oh,
no transaction fee.
oh, no, sorry. Just like the 5% is the carry when I buy the pre-IPO stock.
It's not carry. It's transaction fee. So basically, you invest $100, we charge $5 transaction
Yeah, it's
fee.
similar to Echo. Yeah, it's similar to Echo into Legion. You get a
Yes,
share for
exactly.
the facilitating it. Yeah,
Yeah,
but I
exactly.
pay this only once,
Yeah,
or
only
do I need
once.
to? Oh,
If you don't move, if you don't, there's no management fee. So if you don't touch, you just stay. Yeah. And you sell it, it's free, right? So basically, there's a reason why the fee is very high. If you look at the traditional player, Equity Zen, Forge, or other players, they probably charge from 6% to all the way to 15% transaction fee. The reason is because the pre-IPO thing is not that easy to buy. I would say it's as a scarcity, right? So the more
yeah,
scarce the thing is, the harder we can to acquire this asset. Then definitely the more we need to
yeah,
charge. If it's public equity, it's definitely absolutely unjustifiable. You charge 5%, even 1% is too much because there's so many
yeah,
competitors. You can buy it from everywhere, right? So it's due to the
yeah.
difficulty in purchasing them. Yeah.
Yeah, but you have the fee for like the when I buy. Do you have any other fees for other products, and like how is the monetization? works
Sure.
for Jarsy besides that?
Jarsy's monetization is only 5% in the buy side. So
And
all across
you
the
don't have
platform. Yeah.
nothing else yet.
But some assets, for example, SpaceX, we have a deal like one SpaceX product have a 10% carry. That's not charged by us; it's charged by the seller
Yeah.
or the fund, right?
Yeah.
So we just pass through, right? So this 10%
Yes.
will
Sure,
be
sure.
carried all the way through. And speaking
Mm.
of the promotion, I mentioned we have a pre-sale product, right? So we
Yeah.
make the pre-sale thing more, similar to the group buy in the e-commerce market, where since that part we didn't use our own capital, so people just lock in their own fund. So we feel more reasonable that we charge less, because for the
Yeah.
asset backed, we do use corporate money to for a
Yeah.
long
Yeah.
time
Sure.
lock that for that, right? But for the pre-sale, because you use your own money, we just give the policy of the more you all of you buy, the more cheaper, the cheaper transaction fee to all of you guys. So we start
Yeah.
from 5%, which is the cap, the regular fee we charge. But if it reach 100K total, we drop to 4%. And it's to
Oh,
the
that's cool.
300K or a half million, we charge all the way down to 1%. So you
Oh,
only pay 1% to Jarsy. We think that's reasonable for users, because we just facilitated. We didn't put our own capital into it. Yeah.
yeah, yeah, it makes no, yeah, it makes sense, makes sense. And like, but pulling from what you said about like being a scarce resource, all these pre-IPO stocks, and there is something that was like in my mind earlier today, uh, when I was like preparing the questions, and you have like a lot of like the most uh disputed is not the right word in English. I'm sorry. It's like it's similar word in Portuguese. It's a more like the assets that most people want, and like the most wanted assets in the world, like SpaceX, you like Anthropic, Perplexity, OpenAI, and all these companies. And how can you like you said you and your team has like pretty good connections, and how can you like lock some of these like stocks to tokenize in your platform? Because one thing that I see is if you find a good deal, nice, you got a deal. But if you have a company that you're offering people want to buy and you cannot lock in the deal, it's like pretty it's bad for the business, right? And like how can you gather these deals to make sure your clients always or almost always will have like then available for them, and to people think like if I want to pre-IPO, I know I can get what I want at Jarsy.
So you mean from the supply side, how do we make sure we have enough
Yeah,
supply?
yeah,
Okay.
yeah.
Okay.
How do you get like for this these projects that like nobody want to sell, everybody wants to buy more, and how can you get a piece for that? Yeah,
I think you get to the key of this industry. The problem with the private market for the decades is, for good things, people don't want to sell it. They just want to sell you things they don't want to hold. If they know this
yeah,
thing is gonna become 100x, they're gonna put a lot
a
of
huge
premium,
premium. Yeah,
yeah, to justify that. So we do encounter the same issue as a relatively small player in this private market, because some players usually start from million or tens of millions. So we are not the biggest player. But what we realize is that it's not a binary that it suddenly go from you're trying to acquire asset that there's no such asset that people don't want to sell at all. Even SpaceX, people know it's a good asset and people know that it's scarce. But if you make a reasonable amount of premium, they are still negotiable. So before the valuation of 350 billion valuation in end of last year, nobody can buy SpaceX unless you are very prestigious, or the best fund in the world, like that.
yeah.
You get the shares. But what we observe is that after the valuation ends, the all these primary, the first layer started to need liquidity, and they fractionalize their share and sell a slice of pizza to the second layer, dual layer, and then the dual layer also cannot hold that amount of principal, so they then sell it to a smaller size to a player like
Mm,
us. I'm just giving an example, right? So
yeah,
basically
I got it.
they will add on premium, they will shrink the size and slices to more, and then this market start to work. But as you can see, the problem here is it's still very inefficient. Why
Yeah,
is like the first time, the first hand is always the strongest bonding connection, and then the
sure, sure.
second is the people who know the first connection. It's
And
very inefficient, and we hope that in the future, as Jarsy grow and as we own more assets in our platform, we will become a go-to place for pre-IPO trading, and we aggregate the network effect of small retailers, like GameStop. The small
yeah,
retailers can still aggregate a strong amount of buying power to become able to
yeah.
afford or compete with
To,
the large mutual or
to
family.
liquidate King Griffin.
Yeah. Yeah.
Yeah, no, got it. And it's like so this the it's like the meme of the euthanasia roller coaster, right? And like that's the big guy that had everything, and that's like the
Yeah.
second tranche
Yeah.
and the third. Yeah, all right, got it. So what is like the average premium you guys paid? Do you have this number like easy because it's different for each company, but what's the average premium you paid on top of the last like VC round for those companies?
Sure. I cannot give you an exact number, but I would say for
That's
less
right.
hot asset, we can almost pay zero premium. Uh, like certain, company that not private, but people don't know a lot about like redwood material. I think the price is very
I know.
similar to the rounding price. But for certain company like SpaceX, the premium won't be crazy as well, just because the market cap is already very, very big. So
Yeah.
it doesn't make sense to pay a lot of premium. But I think for let me see, is there a company that pays a huge crazy premium? Neuralink. This is a company that Jarsy doesn't have, but since it's very nascent, so the stage is pretty early. So which means the scarcity is even more scarce because there are not many players who have that. Then I talked to one
What
seller.
stage are they in? What stage are they in? Series A?
I think so, A or B. I can't remember, but it's
Let's see.
very, very early stage, and it's a mask company, right? So the concept is
Yeah.
very cool. Then I see people ask for 60 to 100% premium or 200%.
Whoa. And do you know the valuation?
I I need to look up. I cannot give you the number, but it's still some like less than 100B or something. Yeah,
Yeah,
I don't
yeah,
remember.
it's high. It's high, and people want like a 60 to 100% premium. Yeah, it's crazy. And
Yeah,
now on this premium side, and
yeah,
leaving to other like front, like don't get me wrong, but like I'm all in for democratizing all markets, but have seen like some people's reactions from echo deals and legion deals and this stuff, and like how they get like salty and raised in crypto because some risks you get in private investments and they don't know or they think it's free money. Like how do you deal with these entitled investors like who have no idea what they're doing, but like they want to buy like the shiny new company? And do you have like any legal protection against this stuff? And like how does it's for international, of course, because it's Americans are credit investors. So like it's something like me. Like let me
yeah,
say I have no idea what I'm doing and like I'm a complete idiot, but
yeah.
I want to buy the thank you. I want to buy the SpaceX stuff. It's like 350 bill. Like
Yeah,
I want to buy this and like I don't know what I'm doing. I want to ape and like 50 grand. Bam, ape it.
yeah.
And 1 2 years go by and I was like, yeah, well, I want my money. Like I need my money. I lost something and like pay me back. I don't care. Like it's taking too much. How do you deal with this kind of stuff? And
Oh, yeah, yeah.
if people
First
losing
of all,
money,
yeah. You mean people losing money from what? From the
yeah,
deal
like
was the price
the
dropping
deal is
or the
risky. Yeah, the deal is. Have you seen like some reactions from people like when there is an echo deal and the project changed the vesting terms because of the exchanges,
yeah.
and people went crazy insane on Twitter calling the project a scam and calling
Yeah.
out Echo and asking Echo to give them their money back and stuff like this. And in the pre-IPO, you don't know when the company is going public. The information is there, but it's probably still gonna be people like annoying you guys with that.
Yeah.
So how do you deal with this?
First, in our terms, we do specify that pre-IPO is a very risky investment.
Yeah,
If you buy it,
Echo does
we don't
too.
guarantee. Yeah,
That's
right.
why I'm asking.
Yeah, we
Yeah.
don't guarantee that we provide instant liquidity to you. We don't have this responsibility to sell it back. To take it the amount you paid at the very beginning, right? There's no investment in the world that's guaranteed.
Yeah, I know.
Principal back, right?
Yeah, I know.
Um, yeah, but on the other hand, I think since we have the AMM mechanism and most of our deals, it's pretty relatively liquid. So like if you really need money, you can just discount, right? Like you can
Yeah.
listing on our platform for 30% discount and then maybe gradually add up. So like it's not like okay, we only need to be responsible when we close the shut down the website and don't allow you to trade and get money, right? Or we
Oh,
take your SPV equities and leave, right? But which is also impossible because SPV is doesn't belong. Jarsy is not the owner of that
the only.
assets. Yeah, it's owned by the economic token holders, and they can liquidate the SPV. So basically, as long as I don't know, like as long as you are able to listing and the Jarsy function is working, and you are able to liquidate at to some extent, maybe not the ideal price, it shouldn't be
Yeah,
like
no, I got it.
yeah, yeah.
Yeah, yeah. I think I took some like very crypto native stuff, and like it's more
Oh,
like this trenchy behavior from this like crypto participants. I think it's kind of different. Yeah, yeah.
because
And
our token has real asset value backed by it, so
yeah,
it's not like at the at the end
and
of the
it's
day,
kind of
there's no
liquid.
difference, right? Yeah,
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 the
it's very
difference.
liquid.
Yeah, I took some like some example from like some illiquid investments and like mix
Yeah.
it. Yeah, yeah, because on the echo deals are illiquid, so it's different. Yeah, never
Also we
mind.
have
Like,
the vision of lending, so and the perps. So in the future, if you have these assets and we allow you to collateralize that for money, then you have more ways to get your capital efficiency.
oh, that
So
that's
yeah,
that's good to know. That's something that I was going to ask in the next section. But good to
yeah.
know that you have like these products. Before we go into the next products, I just want to ask about like liquidity and scaling,
Mhm.
because you said you have the AMM, it's very liquid, and I am like very excited about like pre-IPO markets because of all of these AI and robotics companies that are coming. But there's a big question mark in my head, and when I talk to some friends that are also angel investors, and when we talk about that, everybody's concern is like on scaling and liquidity in general. Like how do you think like how can you scale this like to hundreds of thousands of to millions of users and to like create this network effect to get there and to create liquidity enough to get this many people? I don't know if that's what you want, of course, but if the goal is to grow large.
Uh, that's a very great question. Scaling is definitely something we think very important for our product. First thing first is I do think it's like Uber, where the more drivers you get, then the
Yeah.
better a rider can call and get the taxi, and then there will be more
Mhm.
riders, and in turn there will be more
Yeah.
drivers. So similarly, the more supplies. Currently we are taking our own money to buy the supply first, right? Because we want to make user happy so they can get whatever they want. The supply is sufficient.
Yeah.
So that's the cold start, right? And we have the AMM trying to make it very liquid. And then we acquire more users. As you can see that we do a lot of marketing campaign on Twitter, and I talk to podcasters like you. So then we have more users. As we have more users, we have more buying powers to get more deals. And more importantly, when someone wants to sell their token, there will be enough buyers. We have thousands of users, right? So if you want to sell your perplexity, it's almost immediately someone want to buy perplexity.
Yeah.
So we see the flywheel here. It's only if you are a huge, a super big, family office who join our platform, maybe you get hard to liquidate like millions dollars
Sure.
immediately, because our users probably cannot afford to pay $1 million by your take over your stuff.
Yeah.
But most of the time, we do find it's a flywheel. Yeah.
Oh, cool.
Yeah.
And how, like, you said about the cold start problem, and Uber, they used to do like $20 airdrops for like passengers and for drivers. So you want to ride, don't take a cab. Like, here's $20 in a free ride. And the driver, he drove like for equivalent to get $10 and got 30 in his ride. So do you guys plan to do like a points program or token in the future? Can you comment a little bit about that?
I'm glad you know so much about Uber. First, I love Uber. So, yeah, we the whole team came from Uber background. So,
Oh,
what
cool.
we want to we do see the problem slightly different here. We don't want to burn the money by just airdrop the, let's use the word airdrop, give the free cash, because
Yeah,
then a lot of fraudster also came in. They just keep on creating accounts and it just
yeah,
swipe in
yeah.
and so what we do here is that we will think about giving some KOC, the key opinion customers, certain like rewards based on the referrals you make. That's why we have the invite code mechanism, where people can just invite people.
Yeah, I only found one today. That's why I didn't know a lot about the platform, because I only found one today. I couldn't get one last week. And
Oh,
like,
okay, okay, yeah.
yeah.
It's
So
optional.
just sorry for sure.
Invite code is optional. It's more for tracking purpose, because to your original question, we are thinking about certain way to reward, the champion user, but we don't want to make it purely become a, yield farming game. So,
Yeah, sure, got
yeah,
it.
yeah.
Yeah, when you said like I actually know a lot about Uber. I just studied a lot about like incentive games, especially for crypto, and because like airdrops
Oh,
and all these incentive games, and I'm very interested in that. So
yeah.
that's why I went back to the Uber stuff. But you don't plan to do a token, so you it's not in plans, or you cannot
We
comment
don't
about it.
I cannot give you a definitive answer, because I can talk about it, but I honestly don't know as well, because as you can see, our business model is more similar to Circle. So we
Yeah,
want to maybe go through the public IPO path instead of the ICO or IEO path. But here, one thing to note is that since Jarsy is also a tech company and it's a private, so we wouldn't mind maybe in the future listing us as a private company like SpaceX in
yeah, that's
Jarsy.
cool.
So you become an equity type of token holder instead of a governance token holder. So we
Yeah,
think
it's
about
better,
that. Yeah.
right?
Yeah.
It's better to have equity than governance rights.
Yeah,
And
exactly. Yeah. The
yeah,
dividend
yeah, I
is
asked
real.
because
Yeah.
yeah, I
Yeah.
asked because like tokens are like the, if used correctly, are like the best tools for like incentive and to attract to like create like users, get like demand out of the ground. But
Yeah.
it is hard, and like you said, like the yield farming and the Cebu games are getting more and more sophisticated every day that pass. So yeah,
Yeah.
it's a very like a mouse and a cat game.
Yeah.
And on still like on the scaling on this flywheel, like what's like the key part that you think like to get this going, like that you think like you gotta get it right, and like the biggest challenge in this to get this flywheel running. It's like this: get the customers, get the big guy, liquidity provider. What's the
Yeah. First thing, AMM is definitely super hard, because we have so many factors to consider. We have the virtual reserve, and we cannot make the price go crazy, right? And especially
yeah?
for some pools that's very small, not deep pools. So a lot of things we need to customize based on our current early stage. I think if we go to the huge market cap like SpaceX have like a billion maybe in our pool, then things might be much easier. You
Wow.
can use a more, DeFi AM, type of stuff. But currently we do have our research advisor did a lot of work on into it. He's a PhD from Stanford. And then the technical part. And the second part is how to make the operation very excellent. Basically, as we have more users, they both ask for more supply of certain existing assets. Also, they want new assets. So when we are expanding to the new assets, it's sometimes it's hard because how to say it, because certain assets are just very hard to find, and because we are asset backed, which already means our operation will be much heavier than venture or I don't know pre-stocks and other
Yeah.
any just purpose-based company, because we choose
Yeah.
the hardest path. But we have to do it that way because we believe in that's how the price can be steady and then won't get pegged. So I'm trying very hard to source the deals, but it's just for cold start of a new asset is still hard because the buying
Yeah.
power is small, and certain assets is just so hard to buy. The SpaceX is not the hardest to buy. Maybe Neuralink or some other company that's just not having many shareholders are very hard to
Yeah,
buy.
some like
So
figure robot or something like that, right?
yeah, exactly. Figure is 30B valuation and very hard to buy. The minimum is very, very high to
Uh,
to access the game. And yeah, but if you think about the end of the day, if you believe in that the real world asset token needs to be backed by the real assets, then
y-
what I'm doing
yeah,
is
I agree.
inevitable, right? You don't
Yeah,
want
yeah,
to
I
trade
agree.
a token that's there's nothing back. It's
Yeah,
like it's a meme coin basically,
yeah,
right?
yeah. Like I believe like that's derivatives market. Like everything will have derivatives, but at the same time, I think we still have a long way to go, and the derivatives markets are like very manipulatable.
Yeah,
So yeah, yeah, I think like it's the more like sustainable path, like at least for now, for what we have
yeah,
like existing today. And
exactly.
na- now moving on a little bit to the new products and primitives. You said you might want to let people collateralize stocks to get like liquidity and maybe like at perps in the future. What's like the products that you guys have on the pipeline and that you can comment, of course?
You mean that you haven't listed yet? Those.
No, no, no. New products, like you said, in the future you might be able to lend like our pre-IPO stock to get like cash and liquidity. And do
Mhm.
you guys like are you guys building another like other products? And you mentioned something around derivatives too. Are you building this stuff already? Do you plans to build this, or like for now
Yeah.
you don't have another products on the pipeline?
We do plan to build first the mobile app, and then later we will also build the lending and the derivatives.
Cool.
But currently we want to focus on spot trading and scale it first, because
Okay,
if the
got
liquidity
it.
pool is small, there's no.
Yeah,
Yeah,
yeah. There's not gonna be demand for the rest. Yeah,
yeah,
got it.
exactly. Yeah,
And
yeah,
have you think about it doing partnerships, like trying to get partnerships with big VCs? I just gonna throw names around here because I don't know a lot of traditional
yeah,
VCs like
yeah.
A16Z on this like these big guys that have access to these deals and try to get like some partnership with these guys. Have you thought about it? Is it possible, or am I tripping here?
You're taking a great point. Actually, A16Z, like VCs, has reached out to us about tokenize their portfolio company. So it's not
Oh, cool.
impossible. Yeah. Yeah, they know our exist. And we're in the Silicon Valley, so they are very easy to reach out
Yeah.
even.
All
Yeah.
right, so I'm not tripping, and this might be like the end game for scaling for things like you guys, because A16Z has like, I don't know how many billions they have
Yeah.
in management, and you get
Yeah.
some guys like this, and
Yeah.
that's infinite liquidity basically,
Yeah.
and
Of course.
everyone wins. I don't know about like maybe the company doesn't. I don't know, but like the fund and you and the users, like everybody wins. Uh,
Yes.
what now? Bless you. What's the most under and overvalued sector in the pre-IPO space, in your opinion?
Can I say I first disclaimer, this is not investment
No, that's
advice.
not
I
advice.
am not
Yeah.
I feel like for the late stage company, I won't say specific name because I feel it's still become investment
No,
advice.
no, no. It
Yeah.
can be just like it can be just as the sector. The sector you're
Yeah.
seeing like the more like appealing valuations in the sectors. There are more like this
Yeah.
is too expensive.
Yeah. I think fintech companies are in their pretty fair valuation because fintech story is not as cool or as
It's not
sexy as
sexy, right?
AI or yeah, so they probably just justify their performance of the last year or something. And for the frontier technology companies, sometimes their valuation is way over. Specifically, those companies, the last round and this round is 10x, and there's no revenue
It's-
proof. I do think
yeah.
that's something I won't personally buy. And the later stage company, market cap over 50B to 100B are usually pretty fair because VC won't let them raise money in the crazy way because it's a lot of absolute amount as well. But for
Mm.
those in the early stage from series A to B, or B to C, some of them could have a crazy, valuation because the
Yeah.
absolute amount is small, so they just,
Yeah, yeah,
2x,
yeah,
3x,
yeah.
10x. Yeah.
Yeah,
Yeah.
it's like the venture space in crypto in 2021 and early
Yeah.
2022.
Yeah, exactly.
Yeah,
Yeah. Yeah.
yeah,
Yeah.
it's crazy.
You got
And
what I
uh,
said. Yeah. Yeah.
yeah, yeah, we're getting close to the end here. It has been a great conversation.
Yeah.
And before there's a few questions that I always ask to every guest. And before that, what's the part of the roadmap you are most excited for 2025 and 2026 for Jarsy?
Mm, that's a great question. I think first thing I personally would be very interested in is to be I'm not sure about the exact timeline because I'm not the tech person. First thing,
All right.
so I would be interested in the cross chain because we just want to bring people from different. Because currently the biggest issue I saw here is not just AMM or scaling the investment asset. It's about on ramp because stablecoin has been a legitimate thing now with the federal protection, but people, a lot of people are still blocked by wiring money to Jersey, international users. I hate that because I feel like global, like US assets should be for everyone around the world. There is stablecoin already. Why people still face so many issues from Swift,
Yeah.
$30 wire fee, and the exchange rate? Why can't we just use stablecoin? So
Y-
I'm very interested
Yeah.
in solving this problem first. Yeah.
Oh, yeah. So you don't have like straight deposits from USDC through
We
SDC?
do. We
Oh,
do. But we just want to acquire from more chains, right? Because currently we are on
oh,
base. Yeah.
oh, got it.
Yeah. So I wish
Yeah, I
any
understood.
chain native people can use their stable coin to invest in
Yeah.
Jersey. Currently, they need to bridge to base. Yeah.
Oh, all right. Yeah, you could talk to Layer Zero or Chainlink. That probably, I think Layer Zero should be like the best because they're more integrated and stuff. Yeah, I think you
You're
should
the
talk to
expert.
Layer Zero team.
Yeah.
Yeah,
Great. Yeah. We
kind
do.
of.
Yeah. We are talking to this too as well. Yeah. So I'm saying you're
Oh,
expert.
cool,
Yeah. Yeah.
cool. And what's the end game for Jarsy?
I think Jersey will become a mini Nasdaq, or you can say like a Robinhood, where the pre-IPO's price won't be like. Think about it, how fractionalized it is now.
Yeah.
Anthropic from last round to this round, suddenly price jumped 2x to like 600 be more money jumped. It shouldn't be like that. It should be on Jazz. It should be smooth. It's a market. It's all orders, and the
Mm.
money just fluctuate in the market. And think about Figma. One is IPO, before IPO, and after ring the bell, 3x.
This
So
thing.
there shouldn't be this type of jump in the market, right? So I feel
Yeah.
like in Jersey, things should become a continuous curve where everything you do in the private market until you go public is reflect in the market.
Yeah.
Give the extreme example. If Elon Musk say something very stupid on the Twitter, maybe the SpaceX price will change in the Jersey market as well. He
Yeah.
said, I'm gonna quit SpaceX. Then it should just immediately reflect. That's the market efficient
Oh,
market. Right.
yeah, that's cool. So you want to have like price discovery on Jersey, right?
Exactly. Yeah.
Yeah, that would be interesting. Like the real price discovery from like private markets in not so private anymore with democratized access. And
Yeah.
yeah, that's exciting. And
Yeah.
yeah, yeah, thank you very much for coming. And if people want to know more about you or about Jersey, where can they find more about you?
Yeah, first you can type my Twitter somewhere. So yeah, follow me on Twitter and follow
Yeah,
Jarsy's Twitter. Yeah, that's the best way.
I'll
And
leave
we
in the
have our
description.
yeah, and we have Telegram group. It's in the Twitter bio as well. Yeah.
Oh, cool, great. And now the final two questions. How would you describe Jarsy in one sentence?
Let me see. I think I will say pre-IPO for everyone around the world. Yeah.
Oh, cool.
Yeah.
Cool. And the other question is, it doesn't need to be related to Jersey, to pre-IPO, to market. Is I want an alpha for the viewers. I ask this to every guest. Can be related to anything, like to entrepreneurship, to like crypto, to market, to anything in life. Mm.
You mean alpha means a specific company to invest or
No, no, it can be about anything, like something that you did in your career that you think it like an attitude that you did that it helped you like improve, taking a step, or like some thing that you find interesting, not financial advice, but some company that you find very interesting, and anything like can be an alpha or anything.
Yeah, I to be honest, I'm not a invest pro. I'm not a diamond hand. But I feel like what I learned in this U.S. society, like I went to U.S. when I was 18 years old, is that always use your database of people who can you can connect and do them a favor first, and then they will do you a favor. That's all I find job in the Wall Street after graduate. How I got to the like the internship in the Ethereum project,
Yeah.
and accidentally all those co-founders are now very good, are like top leaders on the Web3 world. I
Mm.
feel like there's no way I can compete with them from the beginning or even work with them, but I offered them something, and at the end they just offer a job and become my
Mm.
connection and friend. Yeah.
Oh, cool. It's like contribute first and ask later, right?
Yeah,
Yeah,
exactly.
yeah, I think this is a great alpha, and a lot of people, they, especially the new people, newer people in the market, they like just want to get like feed things first, and it's not that's not how the world works, right?
Yeah, that's for people to the market. I saw a lot of mod people reach out to me say I can be your free mod or I can do certain work for you. Can you just teach me about how to invest or what's good on Jersey? I said, well, yeah, sure. So like you can offer something first before people can
Yeah,
help you. Yeah, yeah.
yeah, I got it. All right, thank you, Ian. That was like a very good conversation. It's clarifying a lot of fields for the pre-IPO stuff that I didn't know about. And it was great. Like I hope like you can like grow and succeed with Jarsy. That was great.
Thank
Thank you.
you. Your question are amazing. Thank you for the interview. Yeah,
Uh,
yeah,
Thank you.
yeah, yeah. See you. Yeah,
See you.
bye.